managing partner of Efficient Estates, and I'm here to talk to you today about life insurance for the individual, particularly those of you who have a lot of interest in that whole life insurance thing, that thing where you have cash growing in it. So I get a lot of questions about that. And one of the things that some people find when they come into my office and want to talk more about that whole life insurance thing is that they're more so interested in some type of permanent life insurance design. And I can appreciate that. And here's why. So I want to redirect the terms and not call it whole life insurance, but I want to refer to it as permanent life insurance. And then I want you to take it a step further and make sure that you're getting a properly designed permanent life insurance policy. So a lot of you like what you're hearing about this permanent life insurance thing because you have access to some cash accumulation inside of your life insurance policy. And maybe for some of you, that may be the best approach to actually saving some money, because the life insurance is very important to you, but the savings account stays low because it's too accessible. Tax deferred growth on that cash value is always advantageous and attractive. I think what's even most attractive is the potential for the tax preferred distributions in the future if it's properly designed, right? Even more attractive feature to this properly designed permanent life insurance thing is what? No age restrictions. So no 59 and a half, no 70 and a half issues. So it makes it a pretty attractive unit to want to take advantage of. In addition, I always tell people, hey, one of the things that I love about permanent life insurance is that you don't, if you save $10,000 this year in your in any other vehicle for the most part, and you pass, right? Because that's something that we're all going to do one day, pass away. Your beneficiaries receive what you save plus or minus the gains or losses respectively, depending on what it was in, minus the income taxes that the heir would have to pay in most cases, right? And depending on where you were saving that, the liquidity, right? The marketability of that vehicle. But with a life insurance policy, that $10,000 would have converted to multiples more, and it would be income tax free to the beneficiary. So it's kind of a no-brainer, right? Here is the potential barrier for a lot of people that come into my office. And it is when we do all of the assessing of all of the benefits, features, and even when we look at the potential disadvantages, they always want to press go. And then we look at the numbers and they're not quite ready to make that type of sacrifice in their budget, right? In order to establish what we refer to again as a properly designed life insurance policy. So what I want to do today is I want to encourage you guys to come on into the office and get insured anyway. Here's what we can do, and I've been doing this quite frequently this year. Instead of delaying getting your life insurance because you are not ready to make the budget commitment to get the exact type of life insurance that you prefer to have, we can open the doors to that design down the line, give you some time to flex and make some adjustments to and get used to some different habits with your budget. Go ahead and buy term. What? Buy term? Yeah. Go ahead and buy term life insurance. Yes, we offer term life insurance at Efficient Estates. One of the things that we absolutely hold our clients accountable to is an annual review. And so 1 year after you get your term life insurance policy approved and in hand, we will come back to the table, revisit, and we can consider converting your term life insurance or some of your term life insurance into a properly designed permanent life insurance policy. Here's the beauty of that. Right now, assuming that you're young, you're healthy, and I am talking to those of you who have people depending on your income, and they will be dependent on that income for many years to come. That could be aging parents, disabled relatives, and your children, even your spouses, especially you husbands who have stay-at-home wives, or you wives who have stay-at-home dads. You've got to protect that income for your loved ones. So you don't want to go and get $50,000 worth of permanent life insurance to meet your budget. No, if you need $500,000 or $1 million or more, that's what you need to try to secure. So for example, a non-smoking male age 35 could potentially secure $500,000 in life insurance death benefit for about $27 a month, potentially $1 million for about $46 a month. For a female non-smoker, same age, and of course we're talking in both cases about generally good health, the female could secure that $500,000 for about $23 a month, possibly secure that $1 million for about $40 a month. It's a no-brainer. This is how we get you in the door. We make sure that we choose a product that's gonna afford us options, okay? Attractive options 1 year down the line, 2 years down the line, or at some point down the line, all right? But we have to get you in the door. Don't you go and buy that $50,000, $25,000 life insurance death benefit because you're simply not ready to make the budget commitment for the amount of death benefit that you really need. Come on into the office and we can get you in the door with term life insurance while you're healthy, while you're young, all right? And trust me, there's meaning to that. Contact me to discuss more.